Oh gosh, I don't think you could see it. There it is, 1949 edition. Well, happy Friday. Welcome back to Stock Talk with Eric Anthony. Okay, so for today, I wanted to just kind of discuss some things I've seen in the market, some schedule changes that I'll have in regard to video uploads. Want to discuss something that caught my eye with Dltr. I have an update on Alpp, and I want to talk to you guys about a new book that I'm reading. I know I haven't posted the past few days or couple days. Well, in the last video, I mentioned that I'm back at work now and I work from home. So we finally created a schedule, and I think it'd be more advantageous to try to probably do about 4 videos a week. I do like making videos every day. It's really, I enjoy it. However, the time to try to upload and record in between working and then doing other things is a little bit challenging. And I didn't want to like make a couple videos that are rushed and just to let you know, hey, the market's green, and just kind of that's it, you know, because I do notice that some YouTubers will pump out like many videos, and more power to them. But I want to make sure I give each video at least have some substance, something that you can take away or something that you can go back to and reread that is still usable. Guess what's the best way of saying it? I want to make sure I provide you guys with videos that you can go back to and still use as a point of reference, instead of making a video that if you don't watch it that day, then it's useless. I don't want to make those kind of videos. But anyway, so getting back to the schedule, I'm hoping to do about 4 videos of the week. I want to give you guys videos on Sundays, Mondays, Wednesdays, and Fridays. That's my goal. Let me know in the comments below if you think those days, if there are better days than others. Like, let's say, you know, just say, hey, Eric, you know, I don't really watch anything about stocks, and I don't really care on the weekend, or especially on a Friday. Don't do that. Let me know. That'd be great, because then I won't do it. The way I see it is if I can do some DD over the weekend and try to find something for Sunday, so what we can look forward to. Try to give you guys a roundup of the week on Fridays of what I saw and just kind of how it's affected some of my plays in the market. And then, you know, on Monday and Wednesday, kind of just see how we started out the week. In the middle, just try to give, like, you know, the hump day vibes, you know, just try to figure out where we're at and, you know, what's the market sentiment, because I think it's pretty fair to say that most people know what has taken over the media for the past week, or about 9 days. So unfortunately, with the situation out in Ukraine and Russia, until that thing is fixed, I think we're, like I've been saying, I think we're gonna have a pretty choppy market. So just be aware of that if you guys are trying to hop in. Not financial advice, but what I'm doing is just kind of dollar cost averaging into some of my favorite positions that are just being hammered. But at this point, everything's being hammered, so it really doesn't matter. But in regard to how I'm doing it, you know, usually when you get some of these, it's not a black swan event, but these events that come out of nowhere, it's kind of challenging to figure out how you're going to hop in and make those plays worth your time. You know, as a long-term investor, the whole goal is just to try to build up as much equity as possible and keep it moving. But at the same time, you want to be calculated on your entries. And if you see that we're keep getting more and more information regarding the war out in Ukraine, I guess what I'm trying to say is, as you see the headlines getting worse, it might not be in your best interest to try to hop in the market thinking that things are going to turn around and you're just going to make a killing off of a big splash. So that's one way out. But if you're dollar cost averaging and you're, you know, conscientious of your position and you see it coming down and you're trying to, you know, make up for it, at the same time, you also might not want to make a big splash just yet, because it probably might be better to just let things ride out. Let there be a resolution out there. Once we start hearing a word of resolution, then maybe that might be a better time to hop in a little bit more liberally. So right now, for me personally, I'm just taking conservative routes with how I'm making my plays. You know, with Palantir, I'm always buying every week. I have my goal of X amount of shares I'm trying to get. Not there yet, so I'll keep doing that. But in regard to my other positions in my portfolio, I have been monitoring them. They are going down, and I have made a few buys here and there this week, but nothing too crazy. I think right now I'm just gonna, you know, I haven't sold. I don't ever really sell, but I do just gonna kind of keeping cash on hand on the side, and then letting that play out. And then from there, I will once we start hearing of things moving more positively, whether we hear talks of peace, we hear meetups of the two leaders that are finally coming together, we don't hear anything about nuclear threats, you know, once all that kind of goes out, then that's when I personally will start hopping in a little bit more, like I said before, a little more liberally into my plays. So that's just kind of what I'm doing. Again, not financial advice, but just wanted to kind of give you guys an update on how I'm kind of playing with my existing positions within my portfolio. Speaking of portfolio, let's look at how things are going today. In the genomics sector, everything was pretty much down around 2 to as much as 5%. But interestingly, in the after hours, bingo was up almost 4%. So it almost kind of got back what it lost. Getting to Mount Feng, everything here down about 1 to 2%. Some of our favorite fintech plays, SoFi down about 6.5%. PayPal 1.41% down, Robinhood down 3.69%, and Affirm down 8.39%. And I believe this has a lot to do with Amazon selling its warrants. So I think they sold about 22 million in warrants that they had gotten back in November. So they're just kind of exercising that. So that's kind of a bummer because, you know, when that happens, it's a pretty big sell. All right, moving on to our EV sector. Everything here down as well. ABML down, Alpp, Polestar down, Rivian's down about 7%, Lucid's down, or actually Lucid was pretty flat today, just almost actually nothing happened. So, and then again, with ABML and Alpp down just under 5%. NVIDIA was down 3.28%, Qualcomm down 1.87%, and Advanced Micro Devices was down 3.19%. Also, at the time of this recording, in regard to crypto also all down just about 7% across the board for the ones that I monitor, including Cardano, Bitcoin, Ethereum, and Polygon. So that's a little update regarding some of the sectors that I monitor on the daily. Like I said, with the situation happening in Ukraine, until that thing gets resolved, and I don't think that's going to happen overnight or even in a couple weeks, just be mindful that the market will probably be either choppy or red for the most part until we kind of get a little more confidence in what's going on there. Okay, so pretty exciting news for Alpp. We got a new contract. As you can see, Alpp subsidiary Morris Sheet Metal was awarded $4.6 million in new projects. A leading operator and owner of a small market business has announced that its subsidiary Morris Sheet Metal of Indiana has been awarded several new projects totaling $4.6 million in the educational and healthcare facility space. Tom Lofben, president of Morris Sheet Metal, aka MSM, had this to say: "We are eager to begin these new projects as they serve to demonstrate how integral we are to the Indiana and Midwest region. I believe we were awarded these projects much in part of how we handled the volatile market conditions of 2021, where unprecedented inflation pushed the construction services market into a negative margin position on many projects due to material costs on items like steel, which rose to over 200%. While it is not easy to absorb such material cost changes, MSM stood by its customers and honored its contracts, completing prior work on time and on budget. The integrity in which we have conducted ourselves as a company in this difficult market has led to our customers rewarding this team with the quality projects we proudly build for our community." Kent Wilson, Alpine 4 CEO, commented, "With the volatility of 2021, it's confidence inspiring to see some rebalancing in construction culminating in this newly awarded work. Morris Sheet Metal has garnered a stellar reputation in the area, and we anticipate the flow of more work as supply chain issues continue to ease." A little bit about Morris Sheet Metal. They were established in 1992 and is a full-service HVAC contractor offering design, fabrication, and installation services in addition to custom metal fabrication services. MSM is an active member of SMACNA and the AFE Association for Facilities Engineers. MSM currently falls under Alpine 4's DSF business model as a stabilizer. Well, again, you know, with Alpp, you know, I've always been a fan of this company, especially as they continue to expand and being one of the top holding companies, in my opinion, that are on the rise. Now, there's just under 5 million. That's great to hear. Personally, it would be nice to start seeing get to the 10 million contracts, but I know in time it will come. And the only reason I say that, not to knock 4 point, the 3 mil. But, right now I think the new billion is a trillion. So when we start seeing things about, 4 million, 5 million, we definitely want to see tens of millions in contracts, because that just starts solidifying their position within their growth expectations. Again, in my humble opinion. And, like that movie in Social Network, and like Justin Timberlake playing the CEO of Napster, and he tells Zuckerberg, a million's cool, but a billion's cooler. And I think, that was a pretty powerful line, but in today's world, in 2022, a billion's cool, but a trillion's cooler. So as these companies grow, I definitely want to start hearing tens and $50 million contracts. That would be fantastic to hear and just see. But again, not knocking this. I think this is huge. The price action, again, wasn't really represented today just because of everything that's going on overseas. Like always, with the companies that we're monitoring, we always want to hear about growth. So again, kudos to Alpp for landing this, and can't wait to see what else comes of it. Okay, so I had told you guys a few days ago that this week, some of the big retails that I'd be watching would be like Costco, Burlington, Dollar Tree, just to name a few. One of them that caught my eye was Dollar Tree, because Dollar Tree reported and it actually fell. But like I had told you a few days back regarding, Bingo's numbers, sometimes you have to allow the market to kind of digest what are in those earning reports and what's really being said. And are the numbers stellar? Are there misses? And what is guidance? Those are kind of like the three things right now. So when Dollar Tree reported, it actually dropped. And it dropped because some of the things weren't that great. So I wanted to bring this to your attention because I think this is a great example, as we had used SoFi as a prime example of what the market's looking for in order to reward on an earnings per se. Side note, since SoFi reported and jumped 20% in the after hours because of great numbers and great guidance, well, if you've been paying attention, SoFi has actually just dropped miserably the past few days. And one of those guidance things, one of the pivotal statements and guidance is that they were going to be looking forward to student loans being turned back on, so repayments to be turned back on back in May. The word on the street is that there might be another pause. And so we haven't got full confirmation on that, but I do think that might be playing a part into why some of the price action for SoFi has gone down. As we start seeing more and more the earnings come out, especially as we get to the smaller caps, one thing you want to keep in mind, especially if you've been in the market for the past few years, is just think, have these prices, were they too high at one given point? Was it a bubble? Or more importantly, were some of these prices that we saw, was a lot of the stuff already priced in? And if a lot of your growth for a company is priced in, such as with, Upstart, we saw that it was just going up, 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 and then boom, right? After a while, if you already have your things priced in and your guidance isn't going to be there to help show even further growth, like further exponential growth, then you might want to be ready to see a considerable drop in the price action for some of your favorite companies. That's just kind of what I'm noticing in regard to the trends for some of the things I'm following. So it's a tough pill to swallow, because you're like, oh man, like something might have been trading at 15 and now it's trading at 2, or something was trading at 400 and now it's trading for, I don't know, 28 bucks, for example. Or look at Peloton, was in the high hundreds or almost 200, 170 range, I think, around there, and now it's like trading for under 30 bucks. Obviously that company has had a lot going on with it, but just kind of look at the price actions for different sectors. So keep that in mind. Like, why are all these companies just dropping? Is it recession? Have they already priced in some of these numbers? So much so that once an earnings comes out and it proves that their rate of growth can't be sustained, if that is proven to be true, that it can't be sustained, then there's going to be a huge drop there too. So again, sorry for this little tangent, but I just think it's important to kind of keep in mind what some of our expectations are for some of these companies, because if you expect your company and you've done your DD on some of your own companies that we don't mention here, and you feel that, hey, you know what, I don't think anyone's even noticed this, but let's say a company that is making sheet metal, for example, and they only focus on the auto industry, but you know that they're going to actually find themselves making all the HVACs for, all the hospitals in certain states, and no one else is talking about that, then that might be a good opportunity to start find yourself building your positions in those kind of companies, because not only is there sustained growth, but there's going to be opportunity for even more growth. And that is usually what kind of helps push these companies up in regard to their price action for their stocks and their share prices. And to piggyback off of that in regard to how guidance can help and what we want to hear with these earning reports, I want to kind of bring your attention back to Dltr. As of yesterday, Dltr shares were rising as the market was continuing to digest its fourth quarter earning results. And the more you dig into the report, the more there is to like. On the surface, Dltr's quarter was far from a blowout. Its top line came in a bit light. Comparable sales disappointed. Gross margins declined, and its first quarter forecast was below consensus. The family dollar unit continued to lag, and it didn't provide nearly as much detail as many would have liked about its $1.25 price increases. Now, that doesn't sound like a result that would help the shares, and indeed, they did fall initially following the report, yet they're rebounding quickly. The Dltr is up about 6% to, at the time of this report, $148.25, which was early Thursday afternoon. Moreover, one of the things Dltr did say about its $1.25 push was that at least half of its re-merchandising, which is it expects to offset declines related to the price increases, would be finished by summer. It's also rolling out its Dltr Plus assortment of $3 and $5 items to an additional 1,500 stores this year, with a goal of 5,000 stores by the end of 2024. That could help all margins, and many see the company's full year guidance as conservative and expect earnings per share estimates to rise throughout the year. One of the key things that I took from that was their Dltr Plus that they're going to introduce to right now the 1,500 and ultimately 5,000 stores by 2024. That's the kind of guidance you want to hear. That's what you want to hear as a shareholder with regard to how a company can continue to grow, sustain that growth, and ultimately blow past it and just keep it moving. Because when you hear that a company not only raise its prices, that obviously is going to help your margins, but you don't necessarily know if that's how the customer is going to like that. Remember, we were talking about Rivian the other day when Rivian increased its price of its truck from $85,000 to $100,000, and the price action for the stock just dropped. It was just followed up with bad press and a lot of cancellations. When you do that kind of price hike, that is no bueno. However, when you do think of Chipotle last year just increased its prices on the low, and they just kept building, and their gross margins are fantastic. And again, now we get back to Dltr. Dltr is now, they've increased their basically $1.25 tree, and they have Dltr Plus with the $3 and $5, which will ultimately help all of its margins. And again, as companies continue to do that, and we as an economy accept that's more importantly, are we as consumers going to accept these price changes and these price increases? If the answers are yes, then these are the kind of companies that you might want to just check out. You know, Dltr doesn't sound sexy to anybody, but look at the price. $140, $148, not bad, especially if you know in the back end that they have a lot more planned down the pipeline. So again, just something to keep in mind. Just want to bring that to your guys' attention. Again, like always, if there's any company that guys want me to do a little bit deeper dive or just kind of read through the report and kind of report to you something that jumped off the page to me, let me know in the comments, please. I would love to do it. Just want to kind of catch you guys up on the past couple of days. So the work dynamic from home and doing this has kind of been a little bit of an adjustment, so bear with me as I try to figure this out. But the past few days have been pretty cool. I know I told you guys a few weeks ago that I've been picking up bowling. I don't want to brag or anything, but I finally got over my 150 benchmark. I was at 169 yesterday, so where I play on league night now, and so they're telling me that if you can get over 150, then you can get some shoes. So I'm pretty excited about that. My next benchmark is a score of 200, and if I get 200, I can get a shirt. So if that happens, I'm for sure going to get the shirt, and I'm going to wear that shirt for the video if that ever happens. So in case any of you guys are wondering how my bowling escapades have gone, they've gone quite well. It's a really fun hobby. I don't know if any of you guys out there have hobbies besides the stock market, but let me know what you guys do for fun, and let me know if any of you guys out there actually bowl, and let me know what your guys' best score is, because at first, it was something that I didn't think I would enjoy, and it's very enjoyable. But speaking of hobbies, wanted to kind of bring you to the last thing of today's video is I just got this book. It is I don't know if you can see it, I don't know if it's gonna focus, but it's The Intelligent Investor. And I wanted to do something a little bit different. I'm gonna start reading this book, and after each chapter, I'm gonna come back, report to you guys what stood out to me. Obviously this book is it's the 1949 edition. Oh gosh, I don't think you could see it. Oh, there it is, 1949 edition. So what, 50, 60, 70, 80? about 70 years. I hope my math's right. About 70 years. But you know, if you have any interest in the market or long-term investors, you know that Warren Buffett is a huge fan of this book. It's written by Benjamin Graham. So what I'm going to be doing, and this whole idea, thanks to my wife at her job, they have a book club, and pretty cool. They all get the same book, and they all read and talk about it and see what they can pull from a chapter and what's impactful. And I thought, oh man, I heard her talking about that. I was like, she's like, why don't you do that? I was like, that's a great idea, but what book? And then shout out to Rolando, he got me this book, so appreciate that. I thought, oh, you know what? Let's do that. Let's try and see. So I don't know if any of you guys have the book, but if you do, I'm gonna read it. I'm gonna start it this weekend, and on either Sunday or Monday's video, I will bring back to you what I could take from chapter 1 and just kind of see how a book that was written so long ago, how it can still be applied to today's market and to today's long-term investors. That's what I'm hoping to see what I can get. So if any of you guys want to join me, again, it's The Intelligent Investor by Benjamin Graham, and I will be reporting on it, and hopefully we could all learn and join this little book club together, you know what I mean? But other than that, I hope you guys have a great weekend, and like always, I'll see you mañana.